Kenya. My name is Larry Meadow, and today we're talking about financial inclusion. How many people actually have access to financial services, not only in Kenya, but also in the wider global perspective, considering that over 100 central bankers are right now in Nairobi over the next few days discussing just that topic. And we're joined by Dr. Alfred Hannig, who's the Executive Director, AFI Global, or the Alliance for Financial Inclusion, and of course our good friend, it's CVK Governor NjugunaNdungu. Thank you very much, gentlemen, for coming in.
Thank you.
Maybe we should start with you, Dr. Hannig. What exactly, at what level are we in terms of financial inclusion on a global perspective?
You see, globally we have 2.5 billion people, adult people without access to formal finance. So these are people with no bank account. And if you narrow that down to the continents, you see a similar picture. So in Africa, between 20 and 55% have no access to formal finance, to a bank account. That reaches from countries such as Ghana, with 80% of the population outside the financial sector, to countries such as Botswana or South Africa, where you have 55% outside the financial sector.
All right, and of course, Governor, this is one of your pet subjects. You keep talking about it all the time. How far are we, or how close are we to getting more people access to financial services in Kenya?
Actually, we are very far, because we only have about 23% that is bankable. If you look at it, since 2005, the accounts have increased from about 2.3 million to about 6.5 million. Out of a 16 million population that is bankable, that should be bankable. So you can see the gap is wide. But we are very happy that at least the banks are moving downstream, because most of those people who are not banked are within the rural and poor areas. So downstream would be going down to the lower income scales to make those people who are bankable. And the AFI, our Alliance for Financial Inclusion, is targeting those people who are living below $2 a day. That is the poor. But the most important thing for us to bridge the gap is actually to say, look, you have a safe haven, which is safe, credible, and can be trusted. That is, the financial sector must be credible and can be trusted, so that the poor can put their savings for a rainy day, and they are confident that those savings will be safe.
All right, but how are services like M-Pesa and ZAP locally helping probably spread that message and get those services out there to people in Karatina and Bondo, where they may not exactly have too many bank branches?
It is actually one of the best messages, and AFI is actually also showing that as a success story. It is reaching out to the people. It also creates awareness that those financial services can be found. I was sharing some statistics for the latest statistics from M-Pesa. As of July, end of July, we had 7.4 million M-Pesa customers, 12,346 agents. And you can imagine that is not a small figure. That's not a small figure, and about 16.8 million transactions. So, which in total transactions, value of transactions, about 40 billion per month, as of July figures. That is reaching out. Yesterday, some of your colleagues asked me, how do we effect financial education, because so that people know how to get to these services. And I think M-Pesa has been one of the eye-openers. We believe through AFI we are going to come up with similar innovative schemes that will help spread the message. One, two, make it attractive to join the financial services, because one of the fears about joining financial services or opening a bank account is the cost. Luckily, in the last 3 or 4 years in Kenya, we have seen costs, barriers to entry to opening an account in form of minimum balances has come down significantly. Transactions has come down within accounts, or even maintaining accounts has come down significantly. What we do need now is to take the banks to the people, because costs of travel to seek those services is still inhibiting.
All right. For Dr. Hannig, now that the AFI, or Alliance for Financial Inclusion, the forum is in Nairobi, but for somebody who's not aware, is it just a talk shop to come and discuss, okay, 33% of Kenyans are unbanked, what happens after that? What is the forum all about?
First of all, I think we have selected Nairobi as the venue for this launch of the global initiative, because in fact Kenya is in the lead in terms of bringing financial access to the poor when you compare on a global level. The success story the governor just mentioned is really impressive, and that also encourages very much to do what we have been planning for under this project, namely to bring these solutions that are already in place to a forum, to a platform where we can share it with other policymakers who are actually looking for exactly such success stories, what they then also can apply and replicate at home. So that's the whole idea of the alliance, that we create a platform where policymakers can meet, they can share. We have a virtual network where you can log on to, where policymakers can identify each other, find each other, and actually supply and demand can meet. It's like a marketplace of ideas among policymakers, if you want, like a social network for policymakers.
Is that follow-up mechanism so that after you have agreed on this at the global initiative, you can make sure there are 100 central bankers, other people that join in, you can actually follow up with them?
Yes, in fact, we are a member-based organization, so our members, such as the Central Bank of Kenya, sign up. The membership is actually very light. The only thing we ask them is to provide their knowledge and their data, and in return what they get is we connect them to other policymakers in the world. For example, Kenya is a very good case, as we have just discussed, but the governor is also looking for new solutions. When he is now talking about bringing the banks to the poor, he is actually now sending very soon, I think they're sending a mission to Brazil to look into the success story of correspondent banking. That is when banks use non-banks like petrol stations or pharmacies or supermarkets, who actually act as conduits of banks to hand out financial services to the poor. Extremely successful, and I actually very much appreciate the overall vision here in Kenya, that the central bank tries to combine successful solutions actually to broaden the variety of services in the country.
Okay, but
actually that is one of what the Minister of Finance announced about agent models, agent banking. And one of the things is actually to say the best thing is that the network can help us run from successful cases. And Brazil and Chile
Brazil and Colombia
are the best cases. And so we need to send our people there. One, to see how it's working. Two, to develop rules and regulations. And secondly, to also see how far we can go. Because essentially for us, we would like to start with microfinance, banks partnering with microfinance to SACCOs. And then by the time we get to the supermarkets, like he's saying, petrol stations, that is when we will have, everybody has perfected it and it's working nicely. So you can see that learning experiences in this network is going to be very, very important for us.
If you allow me to add here, you know, this the fascinating thing here within AFI, the Brazilians are here, and the Brazilians are willing to share. So the assumptions we had that there is a supply and demand is actually really very true. So the Brazilians are already connected with the Kenyans, with others, and we are actually organizing programs, not only for Central Bank of Kenya, but also for others to go there and, you know, to pick up the knowledge and go home and replicate what works elsewhere.
Okay, today also happens to be the collapse of the first anniversary of the collapse of Lehman Brothers.
Yes.
I don't know how the financial crisis is affecting financial inclusion and extending this. Maybe banks would look at going into rural areas, not exactly a priority, especially at a time when they're trying to consolidate their bases. I don't know for either of you if you have those concerns.
Let me put it this way. I think one of the solutions, one of the lessons that we have learned in the global financial crisis is about how regulation works and how effective regulations and pricing the risks that you have becomes very, very important. That's one of the aspects. But you see, developing products and innovative solutions do not always are not always risk-free. That's one very important lesson. But the other aspect of it is to say, perhaps if you include more people with tractable innovations, that's where we would need to go.
I would also like to add what the governor just mentioned. You know, for us, the financial crisis is not so much a problem. We see it more as an opportunity.
How so?
Because, you know, when you look back 10 years ago, when the first financial crisis happened, it was not microfinance that was affected, because these institutions that are working there successfully out there, they had the confidence of their customers. So it was not the small customer who withdrew the money. Yeah, it was, you know, the big customer who withdrew the money. So the system collapsed not because there was a run of the small customers, because there was a lot of confidence in the microfinance system. And I think what we would like to encourage is to have solid regulations, to encourage even more deposit taking, because that can save. That can serve as a cushion, you know, for future losses, like an insurance for poor people, and I think that will also have a stabilizing effect for the financial system. That is why we see financial inclusion as the right answer to the current crisis.